This is a chart which is showing many investors are about to experience some extreme max pain in the markets. We've been covering this for many months, looking at many of these markets bottoming throughout this period of extreme talks of recession and depression. So in today's video, I want to have a look at how this could not end well for many investors who are banking on a possibility of a major crash in 2023. We've got the S&P to go through. We have the collapsing US dollar to continue covering here, as we have done for many, many months now, looking at this being the peak in September. The VIX, which is also falling, which is a great sign for the bulls, and why this is going to be an extreme painful time for many investors, like I've said, in 2023. If you haven't already, make sure you go over to the page, subscribe, like the content up. I'll remind you again throughout the video if you want to wait to see what sort of value you're getting from the content. Hopefully by now, you've been here through the bear market, you're watching the bottoming process happening in real time, you are seeing the value from the content. So let me know in the comment section down below your thoughts, comments, queries. I always love to read those as well. First things first, CPI data, it is down 6.5%. We've got the old year-on-year numbers. We have the core CPI is falling as well. You know from the analysis here on the channel that these are just the effects of the cycle. They're not the causes. I understand that's not going to ring true for many other people out there who focus a lot on this particular data, but we focus a lot on the cycles here. This is your home of market cycles, and if you want to understand how that works, obviously do subscribe to the channel. Now, the inflation is down. The interest rates will probably go up, but maybe not as much. It's what we've been expecting over the course of end of last year in 2023. So this is all falling into place within the cycle. We've got much bigger things to look at as well. In terms of the market sentiment out there, it continues to climb, and I dare say by the time you see this video, I'm recording it 15 minutes from 10 a.m. That is going to be the close time for this. We'll see a higher reading here for the crypto fear and greed index. Also, this is you also see the reading for the market, the stock market fear and greed index will also be higher as well. Now, this is something that I put out on the channel over a month ago now. These videos are from late November and early December, looking at the specific 4-year signal that will trigger that shift. Remember, the reading we're looking for here is above 40 on the fear and greed, as it shows the breakout of the downtrend. Now, this isn't the major thing I want to have a look at in today's video, but it's important just to keep up to date with these particular items, as I tend to cover them in more detail in specific videos. So that is a major one here. I've also got another major video to have a look at and play for you in a minute, as this covered it back on November 24th. The major downside, the crash of the US dollar, with many people still believing that the US dollar's got a lot further to go. But we saw in September of 2022 why that was probably not going to be the case. And of course, we also have our TIA Gann swing indicator. You can find a link to this in the top of the video description. You'll see it at the top here for the new videos now as to why this is the case. When you see major macro breakdowns on this swing indicator, it is telling you that the market is turning. And it tells you it before the news turns, before the macro mainstream economics and economists believe it is. And the reason for that is that it has over 100 years of data, and it is backed up by that data and that research over 100 years worth of reading this particular chart. Before we flip to the charts, I'm going to play you this particular video here to show you how we were doing that at that time, the levels we were looking for a breakdown. Remember, this is all part of the probabilities of trading because there are no guarantees. And once you start to see these probabilities play out, then it just starts to swing more in the favor of the direction that you are looking at on the chart. What we want to see for further downside on the US dollar is a close below this particular line here. I'm looking for around 104.5 as a round number. As August put in a low, that's a key level, and we want to see this particular move continue down. However, what I am anticipating is a move to this low level, which is basically the previous low here that was set just a few days ago. Should we break down from that straight away, then we definitely want to see the market close below this level here, 104.5. 104.7, and then this little yellow one here, 104.5. That's going to give us some good weakness to the US dollar, confirmed macro weakness, and then give some more strength to the other markets that we are following here, obviously the metals and of course cryptocurrencies. So that was a look at the US dollar back in late November. We now find ourselves around mid-January, and this has continued to collapse, probably at a slightly faster rate than I had anticipated. I was expecting a little bit more of a bounce from the US dollar. However, with the drop of the US dollar, like we talked about many months ago, this has also allowed other assets and other commodities, which Bitcoin may be a commodity, able to rise from this point. So just overnight, we saw the US dollar continue to fall. This is another percent down, going from that 103 down to 102. And that has allowed Bitcoin to also bump up from that point. So it's important to keep a full holistic view of what's going on out there in the market. Now we're coming up to the next major support level here. This is the macro 50% level from the cycle bottom. So this is the bull market from January 2021 to the peak of September 2022. And we're hitting that right now. Basically, you can call it dead on 102. We have another few major breakdown levels should this continue to weaken. And if you start to see the US dollar fall under these levels and come back and test them as resistance, that's going to be even weaker and a faster move to the downside. Should we break down, pop back above, this is going to hold out for the US dollar, and maybe we'll start to see a little push back up, more than what we've seen in the past, where we've only seen 1 week reversals, basically this entire move down. Now, the last thing I want to show you here on the US dollar using this signal indicator, the Gann swing indicator, is once you start to see these monthly swing bottoms break, you usually get a pretty prolonged move to the downside. This is over the course of the history of any market that you can throw a Gann swing indicator onto. Check out the previous bull market, which is the one we reference a lot because of the 20-year cycle on the US dollar. US dollar going down in the second half of this cycle, which is looking to peak in the land values and potentially stock market as well, sometime around mid-20s to the late 2020s. You often see the US dollar go down. You get a peak in the stock market somewhere around the bottom or on the way to the bottom in the US dollar, and then the cycle turns and reverses the other way for the USD. So you can look here for the US dollar. This is the tech wreck bubble top. So you got the 2000, 2001, 2002. The stock markets were also falling, but you can see all of these lows through here. Of course, there's one tiny one here. Nothing is 100%, but you look at it through this point here, that move up to the peak, you get the major breakdown and the market collapses from that point. Happens again, you got to move up, a breakdown of the major monthly swing lows, collapse from that point. You can see the monthly up, you can see the breakdown here, market goes nowhere and then collapses from that point. A breakdown of all of those monthly swing bottoms, collapse from that point. So I suspect this is happening again. And in terms of our time frames, we've measured these before, somewhere around that 12 months to potentially a few years from that point. That's for the US dollar weakening, and that is going to lead to more strength to the upside for the major markets out here, which leads me to the major pain for the investors out there, Bitcoin and potentially the stock market as well, or more so the stock market. And what's currently occurring on the S&P is another move back to the downtrend line. But in this case, this is potentially a higher swing low forming here on the medium term here. We're on the weekly chart. If we throw it onto the monthly, we don't have that monthly swing bottom just yet, but we could start to see those in the course of the first half of 2022. The main thing here, and the main pain that we could see from investors, is once we get back to this trend line up here, maybe we don't see the big collapse that a lot of people are expecting. Maybe we start to see a smaller collapse, which we've talked about potentially happening in that sort of March-ish period. Remember, we're on the macros here. And we start to see it move back above and a break above the downtrend line. We have tested this once, twice, 3 times. This is potentially the 4th time. And so we're starting to wear this line out, and investors are starting to see potentially some higher lows here, especially from this October to December period as well. And we're also seeing that in the put and calls ratio. So detrended put and call ratio here. Basically, a lot of retail and a lot of investors are betting on the market going down heavier. This is the highest reading of put buyers here in the entire history of this chart. So a lot of people are expecting the market to go down. And if that doesn't happen and we get that breakout above and a higher low form and a move to the upside, this could be extremely painful for those sellers in the market. We see that often in Bitcoin where you get the short squeezes. People see the market starting to head up and they start to see resistance and they try to short the market as it goes up, but you don't get that push to the downside. And so those short sellers get crushed out of the market as they have to cover their positions. And to cover, they need to buy. And of course, when you buy, you have the buyers buying and the sellers having to buy to cover themselves. You get that pretty quick squeeze to the upside. So pay attention to that. Let's see if that comes out in the next few weeks. Over the last several videos, we've been covering the VIX. Make sure you do subscribe and like the content on the channel so you can stay up to date with the macro analysis here. With the VIX, it's a really interesting chart to identify the bottoms and whether we're moving into a bull market. Almost every single time you see this thing spike, it happens at around very significant lows in the market. You've got 2008 here, you've got March 2009, which was the cycle low for the S&P. You've got March 2020, which is obviously the COVID crash low there. Now we start to break down, and every time we move into these sorts of low volatile patterns here on the chart is usually when the market's either trending up or not trending at all. And so we're starting to see the major breakdown here, as we covered just in the last few days as well, as this market began to break down on, guess where? The monthly swing indicator here. You can see the bottoms breaking down now, and it looks like the VIX wants to drop back into this zone below the 17 and trade between 11 and 17, which historically has been a pretty good space for the S&P to begin to climb again. As for Bitcoin, we are definitely running into this buying frenzy right now. You can see each of the bars is getting larger and larger with a straight move to the upside. This is not what you want to see for a prolonged move. You definitely want to see some small moves up and a correction occur with a higher low. This is far more sustainable in the market as we start to climb to higher prices. What's happened now is we're seeing a lot of FOMO in the market. I'm not saying that the Bitcoin bear market is off or the bull market's off or one's on or one's off. I definitely see us in an accumulation period at the moment because of the factors we've looked at over the last 6 to 7 months since this June low has come in. But definitely in this short term, you're starting to see that hockey stick move to the upside. And this usually ends in tears. People are getting FOMO because they missed out on buying Bitcoin at 16, at 17, they're going to see this pullback. We get to 18 and then very quickly from 18, it scoots to 19. So that pulls a lot of people who have been sitting on the sidelines. The news has started to blow it up. We've seen Bitcoin trending across Australia and the world. And so this brings in a lot of armchair investors and traders who want to catch the trend. So as for a recovery on Bitcoin, we can now get rid of this slow recovery, painful grind, provided we don't break back below $17,000. We're basically into this average recovery, and the nice thing about this close now is that we are now back above that critical previous support, which had turned resistance back in December, and potentially we're going to start our multi-day consolidation above that $18,500 level. This is a great sign for that next stage of the accumulation. We're seeing that the demand is increasing compared to the supply of the market. The supply had been pretty heavy and was absolutely destroying the market. We're not there yet. We need multi-days of closing data above this price to confirm that we are into that next stage of the flip, basically confirming that accumulation period. Because without that, we could slip back down into these ranges again, back below the 18, back below the 17, and potentially test that 15K again. If that happens, then we're probably going to have to come back down and test these lower prices, squeeze out all of these armchair traders who are trying to get on the trend too late. They will sell because they get fearful again, and then we have to see where this next low comes in. So there is those two potentials right now in the market because of how fast it is pushed up. The speed of these moves and how straight they go causes much weakness in the market. Unfortunately, many retail investors believe this is a sign of strength when markets go straight up, but they've shown time and time again this is a cause of much weakness. You want a nice firm base to form and some nice stair-stepping structure to then build us back to those higher prices. Another couple of things that we've seen macro here is natural gas continue to collapse over the last several months, and it always happens from those peak fear levels at the peak of the market when the media tells us that Europe is going to freeze, wait till winter comes, everything is going to turn south and no one's going to be able to afford anything and we're going to end up in a major depression. This was the talk of the media back around the middle of 2022. Since then, gas has absolutely collapsed down to around 350 from a peak of 10. And the other thing which is interesting to note, and this is something I'm going to throw in there for you guys who want a little bit of extra study, we have some of the world's biggest mining companies hitting new all-time high prices. This is BHP Billiton. You can see this traded across Australia, the UK, and the US. It is across all of those stock markets. It has recently, in the last few days, hit a new all-time high price. Companies hitting new all-time high prices usually doesn't occur in bear markets, in deep recessions. So we can look at this in future videos. Do make sure you subscribe and like the content on the channel, bringing you the entire macro picture here, stock market, real estate cycle, and of course, cryptocurrencies, so we can learn how to better profit from these markets. Check out the links in the top of the video description, all of those shill things that you love to hear on YouTube. You know the drill. Bybit and BitGet also still offering massive bonus signups during this bear market. I'll see you guys back here on the channel at the next video. Until then, peace out.